Hey everyone, Coach Investor back with another video for you today. So this is part 3 of a 4-part series of me having conversation with Gali from Hyperchange. In my last 2 videos, we talked strictly about Tesla's future, and what is Hyperchange, what industry is going to go into Hyperchange mode, genomics as well. If you haven't watched those, it's going to be in the top right corner. In this video, we're going to talk about WeWork, what went wrong with WeWork, was it maybe misunderstood, was Adam Neuman actually a pretty good CEO? So we talk about that. We also talk about Coinbase and where that would lead into the future. So if you're interested in that, stay tuned. In the next part, we're going to talk about Square, why Gali did not invest. Maybe he will invest right now after we had this conversation. We're also going to talk about NFTs, digital arts, the virtual world, etc. So if you're interested in that, maybe consider hitting that subscribe button. And if you like these videos, leave an early thumbs up as it really helps me out grow the channel and get my videos out there. So without further ado, enjoy this interview. I wanna talk about something that has I also found on your channel. I watched the WeWork documentary from Hulu 2 weeks ago.
Ooh, I need to see that.
All right, it's pretty good. So I saw your video as well a couple of months ago, I think. You talked about WeWork, I think 2019. That was.
Oh yeah, when the drama was happening, I made some videos about it.
Yes. So I want to know your thoughts on WeWork now moving forward, because they're going public now at a valuation of, I think, $9 billion compared to the $47 billion when they were at their peak of whatever that was. So, because when you made a video, you were pretty neutral, let's say, compared to the broader market out there.
Yeah, and honestly, I haven't looked into it that much recently, so I could be totally wrong, but my kind of take on WeWork is, and it's a broader theme in tech, is like they got overcapitalized. Like they came in, everybody hates Adam Neuman, but his job as a CEO is to tell the vision and raise a ton of money to go do it. He was actually really good at that. And you have somebody like Masayoshi Son who comes in and says like, we're going to value at 60 billion. We're going to give you this. We want you to spend like crazy. And then all of a sudden you're growing way faster than you should be in the locations that aren't as smart because you're being forced by your investors to grow. And so then it's like, well, who is running the company? Just these investors who want an ungodly return on their capital, which regardless of how big the market is, or is it like a strategic move by the startup? And so at some point, I think WeWork, because they were of their own success, gets lost in the sauce, takes the big money, forces the growth. Ego of the CEO is too big because he can do no wrong. And then they always make it look like it's like this big failure and this criminal thing. But it's like, dude, 9 out of 10 startups fail. Like, so I think WeWork's product was great. Like I had a WeWork office. I still think the future of work shouldn't be like these big rigid offices. Like the concept and vision of it is super dope.
Especially now.
Yeah, especially now, honestly. And it's like, so I think I don't know, but then it's just all about execution. Like that sort of business is if, I don't know, they just need a really good leader. I don't know who the leader is right now. So I probably wouldn't invest in it, but.
Okay, makes sense. Like, I think they expect to be profitable by next year, I think already. So it's a pretty big U-turn that they managed to do. Which I don't know. The story was crazy when they released their like the filings, and then you saw the structure of the company. You had WeWork the company, we this, we that, this owns this type, this comes from there. Like the guy basically bought property, made WeWork pay for it via rent, and then licensed the name back to them. I was like, what the heck is this?
So people think that's bad, but like, what if the company didn't have enough money to buy that property and it was going to go on sale in a week and someone else was going to buy it and they needed it? And Adam Neuman was like, well, I can call up my bank and put up my own WeWork shares as collateral to buy this and front it until we can afford it. That's actually ends up being a super homey move done by the CEO. I don't know if that was what happened there, but that's when you like actually think this through and it's just a very different situation than like painting this with the brush of like, it's Theranos, like, and I actually I don't know, you got to hate on the startups, which deserve the hate, but it's also like, I want to normalize more like accepting the failures as successes and being like, okay, like even if this company didn't succeed, like they pushed the boundary on what work was. They changed the way we thought about this. Like now there's a gazillion copycats, and if I want to work in a city and rent an office, I can, and that's a doper future, and WeWork to help pioneer it. So they did change the world, even though the equity went to zero. And so I just think we need to look at it more kind of like that.
No, for sure. I think when you look at this from an outside perspective, I think WeWork was a success and is still a success because without them, I don't think those other companies that are copying WeWork would have been created right now, or other people, or so many people would have used remote work the way they've been using maybe obviously before the pandemic. So in the grand scheme of things, it's a success. Was it maybe too like flying too close to the sun? Most likely. Which brings me to something that is also flying very close to the sun, cryptos. Today, Coinbase went public via direct listing. I don't know if you've been following what's been happening today with Coinbase, but opened I think at 381 and went to 420 or 410 and crashed back to 321 or something like that. So do you have a take on Coinbase, the company?
I think it's a really dope company. I mean, I have all my Bitcoin in Coinbase and I've been a customer for like 7 years and I love it. I think it's awesome. It's kind of like a basic, boring infrastructure play on crypto. Like I think it's dope. Really great company and they're killing it. And I think honestly, the market, I don't think the valuation's crazy. I think the market's on point. This should have a ridiculous valuation. You know, they're number one in this crypto in the on ramp to the crypto universe. And so, yeah, I'm a big fan of Coinbase. I think they have really good management too.
Right. So I'm also on Coinbase. I have my cryptos on Coinbase, but I think as an investment, I don't think it's that great because if you look, most of their revenues is basically when there's a bull market, they'll make tons of money. When there's a bear market, they'll probably not make that much money. And you can actually see that when the crypto market crashed, they made way less revenues than when Bitcoin was at 10,000, 20,000, now 60,000. So I think obviously right now, perfect timing for them. Bitcoin hitting all-time highs each and every day. They are obviously getting the hype, FOMO, whatever. So on that point, great. But then I asked the question, would you not rather own the crypto and not Coinbase?
I made a tweet like 5 years ago. I was trying to look for it, and because Coinbase was raised at like a billion, it hit $1 billion, and I made this tweet like, "This is what I want to buy in crypto: Coinbase equity," because I think it was a levered play. But now it doesn't feel like a levered play if you're getting in at like 150 billion. Like it just, and I think the pace of innovation of Coinbase has been really slow. Like it's really good at buying and holding Bitcoin, but that's what it's always been really good at, and they haven't successfully expanded into new stuff. Like I invested in this company called Rainbow Wallet, which is a wallet for Ethereum. It's kind of like Coinbase for weird stuff on ETH, but like that's super exciting because they're making that DeFi world possible and accessible and building the on ramp to all this crazy unlimited potential of what gets built on ETH. And so to me, and in this really cool like mobile first like Snapchat meets Robinhood like fun way, I think everyone should check it out. But like to me, like that was the exciting business. Like that's the thing that Coinbase should have built and that Coinbase didn't build. And I think that's 100 billion in market cap they're going to lose because they didn't do that. And so I've been seeing them kind of, I don't want to say play it safe, but maybe play it safe, but they're killing it at that.
Yeah. No, they are killing at it. But then again, like you said, other companies could probably copy it and are copying it, their business model. For example, let's say Binance, pretty big in the crypto world. But Coinbase, let's say, what if we're moving like with the stock market and with stocks to zero commission stock trading? If Coinbase goes zero commission crypto trading, their revenues goes almost all the way down to zero because, well, obviously that's their, I think 85% of their revenue comes from fees from buying, selling, and sending out crypto. So I was like,
Yeah.
maybe.
To be honest, I don't think commission-free trading should be a thing though. It's like nothing's free. Like Robinhood isn't free. They just execute your order at a shitty price and don't make you pay the capital up front. Like that's not free. So I actually love that Coinbase just charges me a fee. Like that makes me so happy as a customer. It's like, oh, I'm buying 15 G's of Bitcoin or whatever, or not 15 G's, but whatever, you know, and they charge me $150. And they show like, this is the fee we're taking because we're giving you Bitcoin. Like, it's like I'm paying for a service. They're transparent about the terms. That's actually to me way ahead. That's where all these commission-free things are going to be in 5 years once people wise up to how it's a scam.
Yeah, because I've seen your video with because you invested in public, right?
I didn't invest in
Or
them. I'm an advisor to
an
them.
advisor, okay? Because they're also free commission, like commission free trading, but there's a spin to it because they're not selling your orders like Robinhood.
Yeah, and that's what they're going to have to figure out is how do they make money now?
Mm-hmm. No,
Um,
makes sense.
yeah, I mean, I think investors who are like euphoric about that space in some ways are right because these companies are capturing millions of accounts of the future of the world. And like if those accounts grow and they own them, that'll be huge. But they're not building a good business model around it. There is no business model around it. It's just free.
Yeah.
And yeah. So we'll see
Like,
how that goes.
okay. No, because I was thinking like I wouldn't mind public or maybe even Cash App, I don't know, to tell me, look, if you want to trade for free, since we're not willing to sell your trades anymore, are you willing to pay like a subscription each and every month? So that's how they make money, and you can still trade commission free. Let's say you'll pay, let's
Yeah,
say,
although the recurring thing, then it becomes this psychological game of I've already spent money for the ability to trade, so I might as well trade. And then you're
yeah,
incentivizing people to trade and sell stuff when they shouldn't. They should just touch it and never lose it. That's why I think Robinhood is borderline like really messed up psychologically because they make you pay a monthly fee for margin. So now that's
hmm,
that same thought process, but not I should just trade my stock. It's I should take a loan. I don't need to buy a stock because I'm already paying for the right to take that loan. That is such a messed up psychology that I think is like, right? It's like you're guilting
yeah.
all these people who've never taken on debt into taking a huge debt that they don't even understand. Like, so I think that yeah,
Now with Robinhood, there are so many stories I read. Like it's pretty screwed up. What's like they're gamifying this whole thing way too hard, and then people suddenly, oh shit, I'm in debt, $500,000. What should I do? Like, how did it come to this point? Like, it makes no sense.
right? And like for all the people you hear who got rich on Robinhood, like all the people I know in real life who are on Robinhood are just losing money. They're like, oh yeah, I got sucked into GameStop and put it in Robinhood. And now it's like, at the peak. And I'm like, great, dude. Like you didn't do any homework or research. Like honestly, you deserve to lose all your money. Like, like this whole game of like we do no research on and buy the hot SPAC, like so pumped for that to just come crashing down.
Yeah, the TikTok investors.
Yeah, TikTok investors, like, you know what? Maybe an entire company shouldn't be boiled down into a 15-second video because it's a little more nuanced than that. Maybe it can. Parts of it can, but
Yeah. No, so I wanted to, like, before I jump into something else, because I want to talk about Square, but before I do that, like this whole new generation of young investors, let's say, people think it's not going to change the market because retail investors are super small or whatever, blah, blah, blah. But all those new players, those young players are on social media. They're exposing themselves to like millions of people. And I think like the way we're moving forward, or people will get super educated because, well, they have channels like us, let's say, plugging ourselves here for a shout out. Or people will just think, oh, the market only goes up. Let me buy some GameStop. Let me buy some Nikola. Let me buy this, and that. And I'll be a millionaire in a month or two. Like, where do you see this going with people that now get exposed to all of this information and then like having access to apps like Cash App, Venmo, whatever, and can invest for basically nothing?
yeah. I mean, I have a really crazy theory about where this is all headed that I really believe that, I don't know, everyone thinks I'm crazy, which is that there's already a massive amount of inflation occurring. So the reality is we think the prices are going up and everyone's making money, but the second we start transferring that back into the real world, the pricing power won't be the same. And like, I just think there's going to be runaway inflation. Oh, sorry. Whoops. I had to
Should
make
have
sure I turned
should
that
have
off.
called Elon back.
Yeah, dude, must be important, bro. I'm surprised he's not hitting me up on my Neuralink. Um, what was I saying though about okay, runaway inflation. So I think what's going to happen is our the government, the U.S. government's like kind of the leader for all central banks and fiat governments, and we're getting this spiral of like printing a bunch of money and just continually printing more and more money just at an accelerating pace. I just look at that as the share count of outstanding dollars is increasing just at an accelerating pace, and at some point much faster than the value. So that's going to cause inflation. And even though the CPI or official inflation, like everybody's ignoring it, it's like try to buy anything, a coffee, food, any collectible, any stock, any real estate, it's all soaring and going up. And so I think that's going to start to be this theory, and I could get to a runaway point where like accelerates, and then it's like, yeah, the dollar is seriously inflating everything. You have to store value, and like that's kind of the shit hit the fan moment, I guess, where people realize like their paper wealth isn't actually worth anything. But I don't know. That's kind of a dark thing. Like the doom and gloom people are always wrong. The market always does go up in the long run. So I'm like, maybe Robinhood's smart by just letting everybody lever up. Let's just lever up. Bro. Why not? It only goes up. But
yeah, maybe. But yeah, for long-term investors, it's fine. For short-term investors, which are usually those TikTokers, Robinhood traders, not so well.
Yeah, definitely.